Hi trader, this is Chris with the video analysis on the Forex market and how the technicals and price is looking after Greece's referendum yesterday on Sunday. This video analysis is brought to you by Admiral Markets, and be aware please that we do have this link to explain, admiralmarketsglobal.com. Please select your country of residence and contact the appropriate entity to find out if this video is intended for you. It may not be suitable for everyone. Also, please be aware that trading for exchange and other financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is intended for educational and informational purposes only, and by continuing watching this video, you agree with this disclaimer, which you can find at the Admiral Markets website. So when looking at the four currency pairs that we typically do on Monday, euro dollar, pound dollar, dollar yen, and AUDUSD, personally I find the pound dollar the most interesting at this moment. Considering the situation here, the market environment, I think that one has the most potential. Euro dollar itself, of course, will have its risks this week and probably for the remaining few weeks or even months perhaps, depending on how far the negotiations and what exactly is going to happen from the news front between ECB, IMF, and Greece. But from a technical point of view, at this moment, you can see price is in a wedge, and the correctiveness just keeps on going, even despite the referendum. We did have some downside throughout the weekend here, and it gapped lower, but price already bouncing to the upside perhaps off of this trend line. In any case, price is still within those two lines and is making a wedge at this moment. So for me, a break below the green line could show the potential to fall down to this support line about here, and if we do break the resistance, to test this orange resistance lines. Those are basically the spaces within the euro dollar, a breakout to the down or upside perhaps. But is it very pleasant to trade? I would say not. And here on the daily chart, we can see the limited space that is available on the euro dollar. Now, of course, if we zoom out, the story changes, because then we can see the entire downtrend that has taken place in actually up to about March. And I expect that downtrend to continue probably next month or September, maybe even this month, who knows. But sometime soon I do expect that trend to continue, especially if we break below, I would say 108 at the moment. That could be the signal that this consolidation is finished. Let me make a drawing here so you can see that a bit more clear. This is the downtrend like that. This is the consolidation. So if we break below, we would continue with the downtrend. Okay. Otherwise, there is the potential for price to retrace to the 38.2 fib. In that case, let me add the fib and you would see that point here, 117. If price does make the break here, it's pretty limited because of the fib right at that level. I think the fib is a bit higher. Let me zoom out to the weekly chart. Yeah, just a tad higher actually. There it is. And you can see that the 117 would be a strong resistance. So from my point of view, price can stay in this wedge for quite a while, could even pop out, hit the 38.2 fib and go back like that, or otherwise break. One way or another, I'm bearish upon hitting the 38.2 or breaking below support, and would expect the downtrend to continue eventually, but perhaps not anytime soon, as the euro dollar just goes sideways and corrects within these orange and green line. Before continuing with the other pairs, please be aware of the great lineup we have. Nana is going to take a look at the FX recap here on Monday. Wednesday, he's going to take a look at the Forex range Bar Pro. That's a system, that a very good trading system. Take a look at that on Wednesday. Tuesday, Wednesday, live trading labs and rooms with myself in the morning. And then Thursday, Nana and I take a look together at how to keep that peak performance throughout the entire trading day. All right, now time for the pound USD. Looking at the 4-hour chart, I'm looking specifically at these two lines, a clear resistance line, a clear support line, and price, in my opinion, is going to be very interesting at this point, because is it going to bounce off that major support and break this resistance for an upside rally? That's what I'm expecting at this moment. But if it doesn't and it breaks through support, then there is space down to the 61.8 from the 50, then from the 61.8, if it breaks below the 61.8, down to the 78.6 fib. And every time it breaks a fib, there is that space to the next fib. Now, of course, any of these fibs could be a bouncing spot as well. So any of these fibs is a bounce or break spot as well. So that's basically, you know, the thing I'm looking at. Every time price breaks, I'm looking for a movement to the next fib and then a bounce at that fib. Now, how far of a bounce, that of course depends. If it's at the 50 fib, it could be a big bounce because it's still in an uptrend. The further it goes down, the more chance that the downtrend could be more in play at the moment. Now, from a daily point of view, even though that this is perhaps a bouncing spot here at this trend line, right, and we could see a rally up to the 61.8 fib, in the long run, though, we see still this very strong downtrend. And price is actually retracing against that downtrend. And it's making a kind of a rising wedge chart pattern if we look at these trend lines, right? So from that point of view, we actually hit a bearish 50 fib as well. So we're actually at two 50 fibs. We're at the bearish 50 fib and a bullish 50 fib, right? And we're in between that. Now, for the moment, I'm expecting actually, the thing is that although this is in a downtrend, price could easily head up to the 61.8 as well. So there are two things I'm looking for. As I already said, if it breaks below this support, then maybe this 50 fib is the turning spot and we could be in a bigger downtrend, right? Especially if we break below this 152.50, by the way, roughly, and this bottom. Same like the euro dollar. Should make that red actually, like this, all right? Now, as long as it stays above this trend line though, this could easily be a bouncing spot, and instead of the 50 being the turning spot, there could be space up to the 61.8, which then, of course, is a resistance spot as well, just like this 50 and this 38.2 fib. And then a downtrend could continue from that fib. So will the 50 fib be the turning spot or the 61.8? That's basically the question. So to sum it all up, very interesting spot, potentially for a bounce up to the 61.8 or a break down to test this level and perhaps then later on this level. All right, so that's what I'm looking for when looking at this pound dollar. Those are the major support and resistance lines and the trend lines and the potential space connected to it on this pound dollar daily chart. Now, from a trading perspective, I personally would be looking for intraday shorts because this zone is pretty small. This one is a bit bigger, right? The space between those levels is rather tight. So from that point of view, I would be looking for 15-minute charts later this week, not right now, for shorts. If it does break above this resistance, then I wouldn't even mind taking a swing trade, even look on the 4-hour chart for a potential longer trade, because then I think there's more space to the upside and this could rally and continue to rally, and I think therefore holding on to a bit of a longer trade makes sense because the space is bigger. So from that point of view, I wouldn't mind to keep an eye on a 4-hour chart, look for a 4-hour strong candle that pushes through it, preferably maybe a bit of a retracement of that 4-hour candle, and I would be looking for a long, right about halfway to retracement of that candle for that bounce to the upside. That's how I would be looking to trade this particular long. This is the dollar-yen 4-hour chart, not as interesting as the pound dollar, unless the dollar really starts to make a trend. I think the dollar-yen will continue to correct, and therefore not too interested in trading this. It could be quite choppy. It's making kind of a rising wedge, staying within this support or resistance level. Ultimately, price, could get to the 61.8 fib right here. For instance, it's kind of stopped at the 50 a bit, but ultimately, I think the falling wedge pattern is a bit more important. I think it could stay within that pattern for a while. If it does break to the upside, obviously that's an interesting trade because the trend here was up, so that would be a continuation of that, but not expecting that anytime soon, and therefore don't find this a particularly very interesting chart at the moment. I mean, from a daily and weekly point of view, of course, obviously a great trend up, so if it does break up, it will be a good with the trend continuation setup. But for the moment, when looking at lower time frames at least, this does not have the spunk that I am looking for in a chart to trade. The AUDUSD, and looking now at the daily chart, is definitely a bit different because the AUDUSD broke through these support levels. Finally, it did. No matter how you basically draw that trend line, whether it's the first or the second option, in both cases, price has broken through it. So that, to me, looking very interesting and could be a good runner-up after the pound dollar. So from that point of view, good momentum, a lot of choppiness, and then a follow-through. Now, I'm expecting more follow-through, actually, down to the minus 61.8 target. That, I think, will be the main target, 72.50 on the AUDUSD. So there's more space. And we did reach a temporary target, with emphasis on temporary. So that could be a small bouncing spot before price then continues down to the minus 61.8 target. So That's what I'd be looking for shorts down to that 72.50. So if we then zoom into the 4-hour chart, preferably we would like to see price get up to, well, about 75.50 perhaps, roughly to this broken support line. That would be great if it gets that far, of course. Let's see. I mean, if I put fibs on this entire downside, then probably this is the most recent fib here, as you can see, because this is the most recent top right here. And anywhere 50, 61.8, 38.2 fib could be a resistance spot for downside. I should use a red color so it makes more sense right there for that downside down to 72.50. I would be looking for a stop loss, preferably above the resistances here, above this top and above the trend lines, to have a decent spot that probably will not get hit as price retraces up and then probably continues with that downtrend. All right, I would look for some kind of 1 hour or 4 hour wick that on the candle that shows that there's some exhaustion when running up to the resistance level. All right, make sure to take a look at the Admiral Markets and social media. A lot of good quality analysis is provided each and every day, so make sure to take a look at that. Hope to see you in the webinars as well, and wish you good trading. Cheers.